Donald Trump's net worth has more than doubled since he entered politics. We're talking about growth from approximately $3 billion in 2016 to estimates of $5 to $7 billion by 2025. That's over 200% growth in less than a decade. But here's what almost nobody talks about: the mechanism. How does a politician multiply their wealth while in office and immediately after? And what does that tell us about the system itself? Today we're breaking down exactly how Trump's fortune grew, what it's really made of, and why this story matters far beyond one person. First, let's be clear about the starting point. Trump didn't start from nothing. He inherited hundreds of millions of dollars directly and indirectly from his father, Fred Trump, who built a real estate empire in New York. Before politics, Trump's wealth came from three main sources: commercial real estate, hotels, offices, and resorts, licensing the Trump brand name to buildings, products, and projects, and media, especially The Apprentice, which paid him millions per season and made him a household name. But here's the key detail most people miss. Trump wasn't cash rich. He was asset rich but highly leveraged. Lots of debt, lots of illiquid assets, multiple bankruptcies and debt restructurings. His wealth was real, but it was complicated, tied up, and vulnerable. The presidency didn't make him rich. It made him liquid, leveraged, and globally valuable. Trump famously donated his presidential salary of $400,000 per year, but the salary was irrelevant. The presidency produced three massive wealth effects that had nothing to do with government pay. Effect 1. The Trump brand became geopolitical. Before the presidency, Trump was a commercial brand: luxury real estate, golf courses, steaks, vodka. After the presidency, Trump became a political brand with global recognition and a fiercely loyal base. The value of the Trump name multiplied. Licensing deals became more valuable. Every property, every product, every appearance carried more weight. Trump became a living media company, and in an attention economy, attention is equity. Effect 2. Post-presidency monetization. The real wealth explosion happened after he left office, not during. Here's where the money came from. First, media and digital assets. Trump Media and Technology Group, the parent company of Truth Social, went public with valuations driven not by revenue or users, but by political support and retail investor enthusiasm. Trump's equity stake in that company represents billions on paper, but here's the critical distinction: valuation is not liquidity. It's wealth you can't necessarily access without crashing the price. Second, crypto and NFTs. Trump launched official NFT collections that sold out instantly. Crypto projects, coins, and licensing deals tied to his name. In the crypto world, narrative matters more than fundamentals, and Trump's anti-establishment story is perfect for that market. Third, real estate revaluation. Inflation, negative real interest rates, and a booming luxury market inflated the nominal value of Trump's real estate holdings. Properties that were problems before became defensive assets in an inflationary environment. Effect 3. Loyalty as capital. Trump converted political loyalty into financial capital. His base doesn't just vote for him, they buy from him, they invest in his companies, they treat his brand as an identity marker. That's not normal political support, that's a monetizable community. So, the question everyone asks: did Trump get rich by abusing his power as president? Here's the honest answer: there's no evidence of direct theft or embezzlement. He didn't loot the treasury. But the presidency absolutely multiplied the value of his brand, created monetization opportunities, and transformed political consensus into financial assets. And here's the uncomfortable truth: this isn't unique to Trump. Clinton, Obama, and Bush all became far wealthier after their presidencies, through book deals, speaking fees, and board positions. But Trump took the model to an extreme by directly converting political capital into equity, crypto, and media assets in real time. The system allows this. It's not illegal, but it raises a fundamental question. When political power can be directly converted into personal wealth at this scale, how healthy is the system? Let me zoom out, because this story is bigger than Trump. His wealth growth is the result of three forces converging. First, politics transformed into a product. Trump didn't just run for office. He built a brand, a media ecosystem, and a financial network that operates independently of policy outcomes. Second, attention transformed into equity. In a world where narrative drives valuations more than fundamentals, being famous and polarizing is a monetizable asset. Truth Social's valuation isn't based on profitability, it's based on the story and the community. Third, loyalty transformed into capital. Trump's base isn't just voters, they're customers, investors, and evangelists. That's not politics, that's a business model. This is what happens when money becomes narrative, when markets are driven by stories instead of earnings, and when trust matters more than fundamentals. Trump isn't an anomaly, he's a product of the system. He just understood it better and exploited it more aggressively than anyone before him. Here's the bottom line. Trump's wealth didn't grow because the economy improved. It grew because attention, politics, and finance are now the same thing. And when that happens, the line between economic success and narrative power disappears completely. The real question isn't whether Trump got rich. It's what it means when the system rewards polarization, attention, and loyalty more than productivity, governance, or public service. If you want more analysis on power, money, and how the system really works, subscribe and let me know in the comments what you think this says about modern capitalism. I'll see you in the next one.